Welcome back to Ferocious Education. This is Ed. Today I'm going to be talking about FSLY for the first time, FSLY Corporation. This one here I'm going to go through briefly onto a technical analysis. I think it's important to get a full image of the current psychology of the traders. Then I'm going to go through towards due diligence, research, and everything I could find between filings, latest news, presentations, revenue, and analyst coverages for this one. So let's jump right into it. Now, I'm using here a 1 week perspective frame to understand basically the movement on a 1 week perspective. What we get to see here on an MACD is that it's actually curving downwards and it's not slowing down at this rate. It looks like it's actually continuing on towards that negative trend. On the 80X, it does show that it was actually around 57, which is where reversals are most likely happening above 50. Currently it's sitting at 52, although it's falling, so that's a dangerous sign. The stock here is currently oversold, and the momentum here looks like it's stabilized, but yet it's quite negative. I mean, we're looking at negative 15 compared to 55 on the week of the 4th of October. Unbalanced volume, I'll show you that in a minute on the 1 day perspective. But the moving averages looks like it just turned bearish. I mean, it was in the trading action zone in last week, and it had a chance to actually see a reversal, but that is not something we might see sometime soon. Now, taking a quick look into a 1 day perspective, it looks like it actually might be curving up a little bit on the MACD. It's stabilizing here a little. 80X shows in a potential of a negative trend here. William percent R is oversold, and the volume seems to be stabilizing a little. Moving averages have turned almost all bearish except the 200 SMA at the 55.79 mark. If it does break that, then it goes full bearish. It looks like there might be hope for this one a little bit on the 1 day perspective, but on 1 week perspective, it looks like it's not stopping yet anytime soon. Moving averages aren't really any significant. I mean, on the top 102, middle 93, bottom 83, but you get to see it already fallen that much far. That moving average band will actually continue to dip until it stabilizes. Unbalanced volume, and this is the really interesting one, and you get to see how far it actually dropped. And we think the last time it has been this low would probably be somewhere around February, when it was trading around 23.47. This merely just shows in the unbalanced volume basically the outflow and the inflow, and you get to see the outflow is massive compared to the inflow. There's a lot of fear in the stock. The stochastic fast and slow, they both are actually stabilizing down. Usually when they're both down like this, that might be a signal to enter, but here's why I think you should wait for something here. I'll mention it almost at the end of the video. Let's take a quick look into the Fibonacci retracements, supports, and resistances. Current support is sitting at 58.72 for Fibonacci retracement, 73.56 as the resistance, and 88.41 followed by 109.54. Now let's take a quick look into supports and resistances. First, let's start with supports. Where's the next support that we might actually see? Currently, actually, we're looking into a price point that is sitting at a support around 62.81. Although it's a weak support, the strong support we're looking at is the 48.49. That is quite a significant drop from the current 63.51. But that is where the support is sitting. The next one is 41.99, followed by 36.06. Now, resistances here, what we get to see is we have a few resistances, 72.94, followed by 82.50, and then we're going to 85.49, and then followed 95.06, 99, and then all the way up here around 103. Now, do we see any trends here? Well, I mean, this is a falling stock, so there's no trends, and I'll tell you exactly when I would enter to this company, but let's first check what the news is and what this one has to hold. So on a quick look, of course, we do have some analysts that have actually decreased their rating. So I believe this one here is coming in from Robert W. Baird for stock recommendations. On the 15th, they actually downgraded it to neutral, and they put the price target from $105 to $85. Next, following this one here is from Bank of America. So they actually downgraded it on the 29th to vastly underperform. Piper Sandler on the 23rd as vastly underweight, and then credit issue is actually upgraded it way back in the 15th, but it looks like they're actually being a little bit more downgrades recently. Fastly as well downgraded by Piper Sandler on weak revenue guidance as well, and They put their target price to 65 from 84. Currently, it's trading below both price targets that it put up. Now, what I'm going to do, I'm going to get back to this one here, is I'm going to go quickly through the company itself, right? What is this company here, and what do they do? Think about Amazon Cloud Services. I think that's kind of like almost exact, or what comes into mind right away. If we go to products, Edge Cloud Platform, that is definitely something you can probably see in terms of like Amazon Compute at Edge. It's compute edging, edge computing, CDN, image optimization, video and streaming, cloud security, load balancing. It really does coming to kind of form almost an Amazon platform, cloud platform without everything else. That's what it really sounds like, that's what the website is actually looking to be like. And they have different industries, mainly online solutions. So you would think that they're actually performing the best right now in terms of the pandemic. Now we do have the shareholder letter, and I'm zooming here just so you can actually go through it and you can actually see the details of it. And so what we get to see here, so what we're looking at here is their third quarter highlights. So I'm going to go fast through basically the fundamentals of the highlights itself. So the continued top line growth with revenues of $71 million for up to 42% year over year, dollar-based net expansion rate of 147%, up from 137 on second quarter of 2020. And the net retention rate is around 122% compared to 138 in the second quarter of 2020. Total customer count increased of around 2,047, up from 1,951 in quarter 2 2020. The average enterprise customer spends approximately $753,000, up from $716,000 in second quarter 2020. The revenue they've seen from year to year around 42%. In terms of the percent revenue from enterprise customers, it remains the same at 88%, and the total customer count has increased just a tad. Now, basically, I'm going to go down even further down the line. This document is actually available on their investor website. And so what I want to look into here is their signal signs. We are all well underway on integrating the application security capabilities from Signal Signs into an unified new product offering called Secure at Edge. This will allow us to fulfill our mission for giving developers more power over the security of their applications and APIs at the Edge network. We're very optimistic about the immediate opportunities for cross-sell and upsell to both our customer base. This is a great enthusiasm for Signal Signs. I'm going to go through Signal Signs in a little. We're thrilled that on the heels of our acquisition, Gartner recognized Signal Signs as a visionary for the second consecutive year in Magic Quadrant of web applicant firewalls. Now, Compute Edge update is basically the one I was talking about not a long time ago. Today we announced that Compute at Edge has moved out of beta and into limited availability, with customers now running production traffic on the environment. With Computer at Edge, they're creating new and innovative applications ranging from waiting room tokens, dynamic personalization, authentication at the Edge, full service applications, and more. Feedbacks from customers including Vox Media, HashiCorp, and Love Holidays is that Fastly deep investments in Computer Edge are deeply on the promise of serverless with rock solid performance and features, allowing developers to create with enhanced speed and agility and security. So that sounds exciting there in terms of the future, but right now we want to look into their current profits, right? How far have they gone? How far do they have to go in order to get more of a diverse? Well, I mean, they're going there for a diverse balance sheet, but you want a versatile one as well. So basically, I'm gonna go all the way down. It's quite a lengthy shareholder letter, but right around this area here, we get to look in numbers, and I love the numbers here. Revenue has increased from year to year. We're looking in terms of the gross profit being almost double, a little bit short from there. Total operating expenses, of course, higher. The loss of operations and net loss, you get to see they're actually playing on a net loss of around 23 million compared to 12 million. That's not good. And that's why actually you're getting to see a lot of the analysts under coverage, even though they've hit the 70.6 million in terms of revenue. their total loss from operations are actually bringing them down. And this is not to account in as well their acquisition. I mean, we'll double check in terms of another SEC paper that actually does, I believe, mention that the acquisition cost or the net expenses will be adjusted for Q4. So this might not even be with the acquisition. We'll double check on that in a minute. But the 22-cent per share loss in a pandemic where this is their time to shine, this is where you get to see a lot of the analysts backing away from it and giving it a downgrade. That's the massive highlight of the entire thing, even though it hit spot on with the revenue. That's something to consider. In terms of their cash, they have around 310 million around side, so that is enough to cover for them basically their net losses for quite a long time until perhaps they become profitable. Now let's take a quick look into basically documents and whatnot to be able to identify what the next catalyst and whatnot. So basically, in terms of the acquisition itself, this is the paper I was talking about. So the prior shareholder letter stated the FSLY acquisition of Signal Science would contribute approximately 8 million in revenue in the fourth quarter of 2020. This represents the deferred revenue Signal Science expected to recognize in the fourth quarter, but does not reflect the purchase price accounting adjustment from acquisitions. These adjustments could materially reduce the amount of Signal Science deferred revenue that will be recognized in the fourth quarter. So it's actually got to just around the other way around. I believe the acquisition cost is there, but the revenue is not there. That is something to consider, although it's a very small dent in their 70 million and their massive net loss of around 20 million, I believe, if I'm correct. Looking into back again here, we're looking at 24 million. So it's a small dent, but that's something to consider. Next thing coming up is their FSLY API for compute at edge, and basically they say it shows FSLY our platform because FSLY's API driven performance focused products are clearly customer engineering centric, and 7 years later it's exciting to see that dedicated sustained with compute at edge. That's the person from Vox Media has mentioned for the CTO. The approach FSLY has taken with their investment in compute at edge makes real the promise of serverless. It expands with what is possible for our developers to build while also giving us the confidence to rock solid performance and stability. Quite exciting there for the future of computer edge. I'm not going to go through the exact details, but you're able to go onto their basically website and check it. Main highlights that I'm going to go through is basically they have their form API support. That's a new API support. Command line interface for CLI and compute edge. Main language support. That's a little bit more going on towards beta and assembly script. And observability at your fingertips, basically giving an adjusted interface for a managed API. Now, next thing is taking a quick look into their serverless compute environment, and basically how they do it is by basically using compute at edge software, which gives us 100 times faster code executable startups time running than serverless solutions, and basically it's set to be running on more complex platforms. So the benefits out of that is enhanced security and reliability. Now the next thing we're looking at is their video on demand, and this basically is a streaming service or streaming solution that they have, and that is something interesting. Now the FSLY Live event offers now includes Media Shield with Origin Insights. Basically it creates it uses their Edge Cloud platform, live event monitoring, capacity reservations, real-time observatory. And so that basically offers some solutions for digital events. So that is something that they actually are offering. Now the question is how people utilize it, or how industries utilize it. The next two catalysts that we get to see is actually the Attitudes EMEA for a fully remote conference that will begin on Tuesday, November 10th at 9 a.m. GMT. The event will welcome leading edge computing experts and innovative customers to the stage, including David Annis, the head of engineering at Love Holidays, and Natsuko Erdiozia, CTO of Media Pro, and Tom Heyman, the head of platform engineering at Dillum. And you got Altitude North America, that is happening on November 12th at 9 a.m. You might ask, well, How is this basically catalyst? Well, it's not very much of a direct catalyst, but it's a customer conference. So I mean, it's a conference, and usually sometimes you get to see conferences that are hosted or even uses the platform of said companies. You might actually see a little bit of boost in terms of seeing the product in action. Nonetheless, this one here is basically where customers will share their insights, strategies, and successes. We've already gone through the third quarter, basically the signal signs, and it basically mentions why it's an important acquisition. So basically, we're talking about 200 million in cash, around 575 million in Fastly common stock. Basically, that's acquisition. So expected to close in 2020. And basically, the way they're actually looking at it is they're basically very much off on the same, what they call DNA, which is basically they have the same vision, mission, and values. So initially, they're just increasing their company size with bringing a different perspective. That's basically what the presentation is all about. This is Signal Science, now part of Fastly. They have, if you look in terms of the platform, you get to see very much of the same things: serverless, bot protection, ABI protection, platform overview. I love to see that as well. You get to in terms of solutions, you get to see some of the same industries such as healthcare, finance, retail, and technology. And if you look into their actual platform overview, we get to see very much of the same kind of promises that we get to see from Fastly. So they're very much on the same level. I'm not sure if they actually adjusted this to reflect on Fastly, but if they haven't, then they are on the same level field. Now comes to the question, when do we invest? And I told you I'm going to answer this one in a little bit earlier. What you want to look at is, well, I mean, this is the first entry point where previously we've seen a red ticker, but it was still on an upcline. We might want to look into at the mark of 62.28. If it does break there, you want to look into somewhere between the 49.86 and the 43.64. Basically, we're revisiting this area here. And so why do we want to look at that is because we want to, a strong support where it kind of gives us an insight that, investors are coming back in. People who are scared from starting to sell have slowed down. And that's why you actually need a bullish ticker. And I'm not talking about this one here. This is a falling knife. It was still negative. But I'm looking at something very similar to, let's say, something like this one here. See how it gave it a bullish kicker, another bullish kicker here, or even here around this area here. Around this area here, you get to see every single time this one runs, you need a bullish kicker to kind of see a massive reversal. And bullish kicker means a green candle. Right now, all we've seen is followed like red days. That's what we've seen, and it's kind of warranted with the analysts really punch on this with revenue like this. But I think the future, and this is where you got to think about, what's the intrinsic value? What are the traders gonna think about the intrinsic value? That is the main thing. And the biggest thing for me is, well, I want to look in terms of a support. Now, Amazon already has a big piece of the pie, but competition such as this one here in terms of their cloud platform, that could be a viable future. It could have a viable future. So around this area here that I did mention is where I would probably think to, might have a chance. Other than that, I wouldn't try to catch it on a falling knife. You need, unless it has a bullish kicker. Now, this one here, I believe it has a future in the long-term investing, but you need it to wait on and accumulate and find its current bottom. What do you think about this ticker? Make sure I mention down in the comments below. Share, subscribe, and like. You have a wonderful day.